Hey everybody, welcome back to the channel. Jimmy here. Wow, did you see Apple skyrocket this morning? I want to talk about that today, and in this video I'm going to give you two specific reasons why you should be careful if you're going to consider buying Apple. One involves some hype and the other one involves technical analysis. So with that, let's jump in. So Apple delivered great results. They beat expectations, and one of the biggest positives to come out of this is the fact that revenue was up $53.8 billion, which is 1% compared to this quarter last year. So that's huge. In addition, Apple keeps returning money to the shareholders. They returned $21 billion with $17 billion in stock buyback. And after that, they still have $100 billion in cash. So really positive, a very dovey picture of Apple. But here's the interesting thing. iPhone sales were down 12%. Now in my mind, that's a big issue because that's Apple's flagship product. When you think about Apple, you think about the iPhone. But the interesting thing is, the hot item is their wearables. Apple said it had better than 50% growth in their wearables department. So that market for them is really heating up, which is creating sort of a shift in the tide from iPhone to wearables is kind of an odd thing for Apple. I've been reading articles and watching different shows online and checking out what others' opinions of this are. And it's interesting because the overall sentiment seems to be like, uh-oh, what is Apple doing? What's the longevity of wearables? Where are they going with it? So I think that creates a little bit of uncertainty for Apple and for the shareholders. So to see the iPhone continue to shrink in growth makes me excited for Apple because who knows what they're gonna do to revolutionize maybe wearables and move that forward and continue to grow the company. Now, some people are naysayers and they say without the iPhone, what is Apple? So that also has to be lingering in the back of your head as well. So as someone who is considering a buy in Apple, I would be hesitant and careful and cautious right now because of this reason. Earnings is a great time to get excited, jump into a stock, see a big pop upward, it's skyrocketing, and then reality starts to set in with, oh yeah, remember the fact that the iPhone sales are down? Remember that the wearables that we're not certain about their longevity or even where they're gonna go, that's up and really hot for Apple, and that's kind of propping up the earnings? That could cause people to get a little iffy and cause the stock price to pull back a little bit, leaving you underwater just a hair. So think about that when considering a buy in Apple. I know I sure will. So that was point one. Now point two is going to involve some technical analysis, and for that I want to dive over into the Apple chart and show you the weekly, daily, and maybe some other faster time frames. So let's dive in.
I'm super excited about this. Is the chart for Apple. This is the weekly chart, and let's do some technical analysis on this, and let's just break down what's been happening with Apple. Let's look at their history, let's talk about what it's doing now, and let's see what maybe the options are moving forward, or at least the likelihoods. So if we look in here, we can see that Apple has just been a great grower. You can see the low down here in the bottom left of 102.53, and then it's just kind of been moving up and looking really strong. Touched the 50 simple moving average a few times, ripped up, went to 233.47, which was indicating that Apple might become a $1 trillion market cap once again. So 220 and higher is kind of that line for getting back to the $1 trillion market cap, and it did that, and then it pulled way back. Now, we have to remember, historically, this was the end of 2018. This was a very rough time for the markets. It was sort of doom and gloom. There was a lot going on. And then we got into 2019 and we resolved that, and Apple's been really strong. It's really only had a few down weeks for the first part of the year. Then we had this pullback, and now we're moving higher. So then today, we get this great news. We get earnings per share beats. We're getting all this dovish sentiment about Apple. It sends the stock higher. The stock starts ripping in the pre-market, and now we're sitting here, and you can see current price of $217.27. It's huge for Apple. It's beautiful. But I want to show you why I'm a little nervous about jumping in here after such an exaggerated gain. So what you can see, we'll start on the weekly chart here, but when Apple pushes up, we remember that any overhead resistance on any chart is not an exact penny, it's a range. So it can be from $1 price to another, and within that range, a stock can bounce and find resistance or break through and then establish a support level. Well, you can see back here on, let's see, the 8/27 of last year and little early September of last year, and then again here in October, we had some touches in this range which established sort of a sharp turnaround in the markets, which makes it currently an overhead resistance level. It pushed down, came back up. Now it didn't get back into the range, but the range lurking above this price action could have been responsible for pushing it back down once more. Now we're right back up here, and the one thing that surprises me every time about technical analysis is sometimes I think, well, that's just a coincidence, that a stock stops on a penny and goes the other direction. And then I look at historical figures and see, oh my gosh, it bounced right off of a little level or a little range that was from, a year ago or 2 years ago. It's uncanny how this happens. And I drew this box in this morning. This is my overhead resistance range box. And I was just watching it and saying, could this be used as overhead resistance for Apple? Well, Apple opens up, pushes right to the bottom of my triangle, and then cools off. So in my head, immediately I'm thinking, yes, that was a test of this range and it failed right now. So yes, Apple is up. Apple's doing great. They're reported great earnings. They've had growth in some different areas that are fantastic. I am nervous about the fact that the iPhone is declining in its sales right now, but it pushed up. It had a great morning. But then you got this overhead resistance that's looming. And that makes me a little uncomfortable with getting into the long side on Apple right now. Now I want to flip over to the daily chart and show you that as well. So if we look at this, you can see our box that we have drawn out. You can see all these touches in here establishing this range of overhead support, and then it fell off, and now we're back. So you can see this gap. We had this beautiful gap up right here this morning, right here, pushed right up into our rectangle that we drew and got rejected. So right now, my concern is that if we go into tomorrow and the next day and say we're still feeling dovish and the rate cut with the Fed causes more catalyst for Apple and it stays up and pushes into this level a little bit, if you get in here and we get rejected, remember, now we have this gap. We have a gap to fill below. So what could happen is Apple could get rejected again, hit this gap, and then as we all know, gaps act like vacuums. It could suck Apple back down to this 210 level before it goes higher. So I am concerned about overhead resistance on Apple. Does that mean Apple's not a good buy? No, because I think Apple is going to go much higher in the future. It's just, why not wait to see if it gets rejected? If it does, watch to see if it goes back to this gap, and if it does, wait for it to bounce off the bottom of the gap before getting long. So getting a position in the 210 to 212 area rather than trying to jump in up in the 220s. Just my opinion, just my thought, but it caught my eye today and I wanted to shoot a quick video about it just because it's easy to get caught up in all the hype of earnings and get super excited about, hey, Apple did really well, I want to jump in, I want to get some stock, I don't want to miss out, but then bam, you run right into some overhead resistance. Now, the other thing is, we could move into this level, blow right through it, pull back and test, and then go higher. And that's great, that would be wonderful. But I would wait for my buy to be off the bounce. So I'm either going to enter Apple off the bounce here or off the bounce here. Other than that, I'm going to wait on Apple. I'm going to be cautious about it. I'm curious about the iPhone sales moving forward. I want to know more about the direction of the wearables market for them. And I want to see these technical levels demonstrate support rather than resistance. So leave comments below. Let me know what you think about Apple. Did you take a long position today? And if you did, what was your logic? I would like to learn from you what your thoughts were for entering this position. But for me today, it was super clear that we're caught in this kind of strange, precarious position. And rather than jumping in and hoping it goes well, I'm going to wait for some levels to be tested, wait for some confirmation, and then I'm going to go long. Thanks for stopping by. If you're new to the channel, consider a subscription. The channel's been growing a lot recently, and I really appreciate all the support. It's been very exciting. If you like this video, give me a thumbs up, and we'll see you tomorrow.